And I'm curious to you, as far as from your perspective, actively intraday trading exclusively, nothing longer term, trading futures, is it realistic, and does the scale work to where this could be $1 million a month business?
Yes.
Yeah. 5 million? Hello, everybody, and welcome to a brand new episode. We're getting ready to jump into a conversation that I had with Merritt from Apteros Trading. Now, if you've been trading, especially futures, for any length of time, I'm sure you know who Merritt is. And if you don't know who he is, then I'll be excited to be the one to introduce you to him through this episode. During the conversation, we talk about his background, we talk about his come up. He's got a very interesting, unique story, really the type of story that movies are made out of. Small town kid, grew up, fell in love with the markets. He moved to New York, the big city, to chase his dreams. I won't spoil it for you, but you can watch the episode and figure out how his story ends, or at least where it's at to date. But it was a really great conversation. I really enjoyed being able to sit down and have this conversation with Merritt. You can tell by the length of this video, he was very generous with his time. I was able to sit down and really pick his brain, ask him a lot of great questions. And like I just said, I was very happy and really enjoyed sitting down to do this. And I hope that you enjoyed this conversation that we had as well. And I hope you can get a lot of value from hearing from Merritt and hearing from me pick his brain a little bit, okay? The video is very long, so we'll keep this introduction short, but I just wanted to come on and say a big welcome. I'm very glad that you're here. I hope you enjoy this episode. Let's jump into it and hear from Merritt. So let me introduce you, but I'll do some bullet points of your life and you can stop me if we need to flesh anything out or if I'm missing something here. But just for everybody listening, you were Merritt. You were born in Alabama, small town USA kind of a feel?
Yep.
And let me see, you from a very early age, you were interested in trading through like high school, started trading all through college. You saw the movie Pursuit of Happiness, changed your life. You grabbed the one tie that you had on and ran out the door. You started trading other people's capital at some point, and then from there traded all your way up to the big city where you got recruited by SMB Capital in New York. You started trading there, worked your way up to being their head futures trader. And then one night, similar to the Grinch who stole Christmas, you stole all their playbooks, you evacuated the city and started your own competing firm. But you left SMB Capital and then started your own proprietary shop, Apteros, which is where we're at right now.
That's right.
Very good. Okay, so let me flesh out some of these details because those bullet points are one thing, but it's a very interesting story. Let me first ask you, I heard you say that the Pursuit of Happiness really changed some things for you. Why was the movie Pursuit of Happiness with Will Smith so impactful for you?
You know, it's actually kind of weird if you, I guess, really dive into kind of the psychology about it. But, and it's so funny because at that time, you know, I knew that I liked trading. I would argue that I really didn't quite know how hard it was going to be or would be, just like most people who get involved with markets in some way. And it's weird, but I don't think I've ever been asked this question, but I believe that I really, really connected with the pain and the struggle that Will Smith had. You know, I wasn't homeless, sleeping in a bathroom or anything. I was in a, dorm room or apartment or whatever. And, but something about that struggle and, I don't know if you just want to bring it back to no pain, no gain, but just making it, things are better when it required a lot of pain and effort to accomplish. And I think somehow I just connected that with, this is something that I know that I love doing. And for, I was just a kid at the time. I thought, well, it's just going to be a hobby. I know that it could be hard to achieve on like a mastery level. But I'll just kind of have it as a hobby. And so for me, the movie, I think really was like, you know what, I want to get down in the trenches and I want to do this thing. And I'm inspired by his struggle. I think it was really about the struggle.
Yeah. It's an interesting paradox in life, or at least it's a kind of the comedic part of it, that the only thing that's interesting is things that have come through very hardship, things that have come through struggles, and things that have come easy, they're just not interesting. And the only thing about you that is an interesting person are those things that you have come through. And, the same exact thing with me. So I relate a lot to that. I was in this self-improvement program once, and one of the exercises they had us do was to list out our favorite movies and to draw these comparisons between the main character. And they were shedding light on this idea that part of the reason why you are drawn to this movie is because you see something in yourself in this main character, which sounds a little bit like what you're saying there. So,
Yeah.
okay, very interesting. Now, when you went to New York from Alabama, small town, to like go into the big city to work for a big firm, I mean, that's like the ultimate dream. How old were you when you left to move to New York?
So it's it's kind of funny because I was actually just dating my now wife at the time when I got the offer to go there, and I was planning on, and I don't even remember the exact times or whatever. I know I moved there in like January, right after the start of the new year, got the offer to come in like December, and I had already bought the ring to propose to her. I was going to propose to her and did so on Christmas Day. And so it's this whole whirlwind of, I can't tell her that I'm proposing to her, and now I'm telling her that I'm moving to New York, and she's actually a little upset, and so it was kind of a whirlwind there for a little bit, but it all settled out nicely.
It all worked out in the end. Okay, moving to the city was a big deal. What was it like? Were you like wildly scared, or you got like adventurous spirit and just ready for the new challenge, or what was it like?
I was certainly in awe. I was really, though, it was kind of like the priority was the trading and that prop experience. And it was kind of like a bonus of almost, it's like getting to travel the world, right? I'm just getting to get these experiences after work. It's this hodgepodge of this amalgamation of people, right? It's and not just any people flame out quickly in New York and leave New York, right? And so the people that are there, the people that you're grabbing a couple oysters and cocktails with after work, like they're there to get something done, right? They're there to hustle and chase their dream and whatnot. So that energy that's in that place is a real thing. And to me, the energy is a capitalistic, self-driven type of thing that most people there have. So it was really cool. And even just, I mean, there's something to the architecture and the towering buildings around you, and the lack of sunlight and vitamin D and the hot trash smells, and the rats. There's people said, like, overall, what's your experience in New York or whatever? And I said, New York has the best of everything in the world and the worst of everything in the world. It's literally just got everything there for you. But yeah, we had a great time up there, and I wouldn't call it daunting or scary or anything like that. It's just it was a really cool experience getting to, because it's all about the people, right? It's not about the pavement or the stones around you. It's about the people, and the people there are typically pretty interesting, pretty cool to hang out with.
Very cool, very good. Now, life at SMB, you were there for how many years?
Just over 4,
okay, great. And now you are at Apteros, and Apteros, is it in Alabama?
No, I'm in Nash, Vegas.
Oh, Nash, Vegas. Very interesting.
So I'm from Bama. My wife's from Kentucky. Nashville's right in the middle.
Okay.
And it made sense for us. And it's a great town.
So this is where you live, and this is where you have a physical desk. Are you in the office right now, or are you home?
No, I'm in my basement here.
Okay.
We don't have a physical office.
Okay.
That is part of plans for the future.
Yeah.
Once there's like a critical mass for high performing traders who are willing to relocate here or happen to be from around here or whatever, and be together. Right now, we just don't have that. We have guys we have high performers, but they're all over the world and they don't want to uproot themselves and come to Nashville right now. So we have a digital desk. We try to put in place things that make it, a lot of the benefits of being in a physical proximity. You're never going to totally fabricate all those things. So there are challenges to remote type of world that we live in now. But yeah,
something you just don't get when you're not there with the person, even a conversation like this.
If you're not peeing next to a guy, you're really not going to learn as much from him as you could otherwise.
Okay. Yeah. It's a way to say it for sure. Okay. So here in Nashville, very cool. So I feel like that's a good little catch up of you and everything. If it's okay, I'd love to talk about and just kind of keep the introduction going into the trading method that you're doing. How would you describe your method, or how would you describe the way that you approach the markets, your strategy?
Top-down approach.
Okay.
Very heavy on what is potentially one of the biggest secrets of markets, which is proper use of multiple time frames. Most people kind of get that wrong, I believe. So seeing what's going on across multiple time frames, and everything is really from a profile perspective, value based. Some things I think perhaps some people get wrong is they think that, well, a value area is a value area, and not all value areas are created equal, right? Value needs to be a measurement that is attached to a market that's actually in balance over the period that you're measuring value. So anyways, getting those things right, a lot of profile work and VWAP work, and order flow work. So really the big picture context comes from multiple higher time frames, profiling, and VWAP across multiple time frames, and where price is relative to all those things, ranking and distilling those pieces of information, distilling it down into kind of what's most important today, or for whatever time frame you're kind of applying NADRO to. And then from there, it's about what are we doing intraday from a price action perspective, from a perhaps context affirming or context shifting perspective, right?
Yep.
And then what does the tape tell us along the way in terms of the underlying strength or weakness of some of these moves?
Yeah, very good. You know, it's interesting you said it, but it's, I think something very difficult for people to get is the tools that they're looking at, how they're analyzing the market, understanding when that information is important and when it's not, or when that is going to be valuable for today and when it's not. Because similar to what you just said, you might have a value area that today, this, you know, micro composite is the trade idea. How we interact with this is the most important thing. And there might be another day where a micro composite value area doesn't even come into play at all. And it's
I think it's really important to understand the chronological sequence of events as it relates to a lot of references, right? So if you have a composite value area and today is day one, breaking out of that and kind of firming up the retest and it's going, that's a big deal.
Yeah.
However, if it tried to break out the day before and maybe had some success, and then it failed back into it and then spent 2 days in it, and then it tried to break out and then it failed back. Now, all of a sudden, that reference, the market's telling us, hey, it's not a game changer of a reference just because we start to hold above it or below it. It's weakened because of how things have progressed over time. Understanding how there's like key rejections from areas that are really important that can allow you to draw some really strong lines in the sand versus reaching an area that is, in my opinion, should be understood as more of a destination area that the market is getting to. And that is a very different area the market could be trading in, again, contextually, versus one of those fresh shifts, those fresh rejections from an area. A destination area, there's just not as much of an edge to lean on, not as much of a directional bias, not as much of an edge behind it in terms of an implication for what that means. And being able to read the market like that and see where the market is leaving, and that's important, where it's trying to head to, as markets like to revert to prior areas of value and things like that by nature. Being able to speak that language is really important.
Yeah, there's an incredible amount of wisdom in what we're talking about right here. And I think that a lot of people get very close to this, and it's one of maybe the biggest sources of their frustration. And this happened to me a lot. And I think I'm talking to a lot of people that this is happening to, where maybe they come in the morning and they perform so much better in the morning. And when they stay on the screens towards the afternoon, everything kind of falls apart and they unwind. And if you drill down to the core of that, their trade ideas for the morning, there's an actual
They're done.
Yeah, exactly. And there's a real reason to expect that we will likely head to here or here. But then once that is done and you're still trying to just, you know, squeeze blood from that rock, the quality of that trade idea just...
That's so true. A lot of people like to just say, oh, it was my psychology. I got tired. I lost my discipline. I lost my focus. I didn't have my smoothie, blah, blah, blah. And in reality, a lot of it is just what we're saying here. It's more of you had some really good ideas. Maybe you screwed them up. Maybe you traded them successfully. That doesn't seem to really matter. But then when the market completes that, I feel like I don't have an edge, right? My edge comes from the edges of areas where we're leaving fresh balance areas or reverting or things like that. Basic type stuff when you really get to the heart of it, but doing it across multiple time frames and kind of deciding what's most important and what's not, like we were saying earlier, is the real game changer, I think.
Yep. Okay, very good. So you are value-based trading, very important to you, active intraday, trading futures exclusively? Do you swing trade? Do you trade in other markets?
I will swing trade. A lot of times what I like to do is I will sell options as a directional bet, just naked. And then I will use futures as my methodology tells me your position is in trouble, buddy. So I will then delta hedge out that options exposure. When it's in trouble, I will release that hedge when I want that exposure back on.
Wow. Okay. Very interesting.
That's my one of the newer layers to my trading is doing that on a higher time frame, more of a swing, couple days to couple weeks type deal.
Cool. Very cool. And you are trading crude oil primarily?
Used to. Crude oil, I kind of left that market once it we had that amazing volatility in it when OPEC went for that crazy squeeze out US shale move and everything. And then, in the kind of right there in the fresh new COVID era and everything. And then crude oil kind of died to me there for a while. Literally, the tools that I use in terms of like cumulative delta, order flow, things like that, just went bonkers in that market. It stopped behaving as normally. So I stopped trading it for quite some time. I used to consider myself a kind of a real crude oil specialist. Now my approach is, I mean, I traded crude oil today. So I still certainly trade crude. It's back in line. It's back to normalcy now. It's not the good old days of what it was. But when VIX is spiking, when fear is in the air, things like that, I tend to kind of get a laser focus on the S&P, maybe NASDAQ if I'm really kind of scalping shorter term. And then when the market is in more of a quieter, less volatile state overall, I have 3, 6, 9, 12. I have 14 markets in front of me that I track and will go to find the best contextual opportunities to then deploy kind of intraday risk or potential swings.
Wow, good Lord. Okay, that's 14. Do you have any issues with the actual execution portion? Obviously, trying to enter a trade, at least from my perspective, on crude oil would have to be handled very differently if you're trying to enter a trade on ES. It might just be how tight I'm keeping things, but is that a factor for you or no?
I mean, I keep things tight as well, but the approach I'm deploying doesn't change between crude and S&P, so it would be the same. So I think a lot of people get a little hung up on, oh my gosh, like you're gonna like potentially trade these 14 markets. No. Pre-market prep, I'm gonna scan those things. I'm gonna do all my contextual analysis to find out which one I want to go focus on for the day. So then I'm really just focused on one market. It's not too much to handle. And my execution process is fairly simple. I bang in with market orders typically. It's pretty simple.
Sure. Okay. Got it. Now you mentioned the VIX. How big of a role is the VIX to you? Do you like look at the VIX every day?
No. I use that as a generic term to describe volatility spiking, fear, risk off mode in markets. And when you're in that mode, the VIX is generally spiking. That's at least how I understand it, right? But no, I don't follow the VIX. I couldn't tell you where the VIX is now. You gun to my head, I'll guess where the VIX is at right now. 30. I don't know.
I'll tell you, it's funny because I think I've, over the years, people that I look up to or that I've respected one time or another would have mentioned the VIX. And it's always been this thing. that probably over the years, 5 different times, I've seriously sat down and figured out, like, people are using the VIX. I need to figure out why this is, what can I use this for as valuable to me? And I've just never been able to, I've just never been able to do it. And it's one of those things I've referenced back over like 8 months of never even looking at it and thinking, hearing somebody say it again and thinking,
Yeah.
is there a way I can use this information? And it's just, I've never found it. I'm so drilled into the action. I don't need
You
to
don't
see
need,
the
like, for example, I haven't looked at the VIX today, and I would be willing to bet my entire net worth that the VIX is higher right now than it was yesterday, right? So we know these things,
Sure.
but you don't have to look at it,
Yeah. Okay. Got it. It was just curious when I heard you say it. I did as a reference.
I'm just trying to sound smart, man. Come on, throw me a bone.
Yeah. We'll fix that in edit. Okay. So could you walk us through just a day in the life? Let me paint you a visual picture and then you can take over. It's Tuesday. There's no FOMC tomorrow. It's just a Tuesday. What are you doing?
Tuesday.
Any given Tuesday.
Yeah. I am fairly non-rested.
Non-rested.
I have a 7-week-old. So we're in the, I have a 2-year-old and a 7-week-old. So we're in the trenches right now. So I'm not rested on any given Tuesday right now.
Do you track your sleep?
I mean, my wife handles the brunt of this. I'm just a light sleeper. So I hear something, I kind of get woken up as well.
Yes.
I'm up and going around 6:30 or so.
Okay. This is Eastern time?
Central.
Okay, so it'd be 7:30 New York time.
7:30 Eastern. Yep.
Okay.
I get low blood sugar. One thing I used to not really take care of is my body. So I'm making sure that I'm getting, some good protein, some good carbs, staying hydrated. The whole, morning routine. I'm not like off the deep end with anything or whatnot. I know people who are, insane about their structured water and, all that good stuff. I'm pretty simple Alabama guy, but anyways, take care of the body. Self check-in, quiet time is very, very important. You can, part meditation, part prayer, but definitely being in tune with myself in terms of how I'm feeling. Is there a level of emotional upsetness? How tired am I? All those good things. Where am I as I really get into closer to the trading day on maybe a spectrum of overconfidence or underconfidence even can be really important to kind of just knowing and acknowledging where I'm at there with some of that. I am currently taking our 2-year-old to daycare. So I run him over to daycare, not too far from the house, back, coffee, sit down at the desk, fire things up, do kind of a little bit more of an official self check-in. Then I check on my traders, see if there's any kind of, overnight action and things that they've been doing, if they need help, or if there's a risk issue I need to attend to or things like that. And then it's depending on the market environment, as I mentioned, right? I might just fire up the ES and not even look at anything else. Or if it's quieter times, as I said, then I'm going to start that kind of approach of doing an analysis on a lot of different markets and seeing where I want to focus my attention that day. Trading very intensely, typically in the morning. That's kind of my sacred time where I'm not really available to anyone else for anything.
What time is that from? From like 9:30 to 11:30 or?
No, it's from like just before 8:30 my time. So just before the opening bell, typically, maybe call it 8, when energies are opening and things like that. For let's call it 2 hours. That's kind of like a dedicated block for me. From there, I'll check in with some people who manage like teams of my traders and whatnot, seeing what's going on, what they're seeing. They kind of run morning meetings with those traders for me. And then from there, it's also going to, what my day is going to depend on what the volatility is like, what the opportunities are like. Am I still kind of trying to get into a really, a an A plus type of a situation position that I've yet to be able to get in and stay in. If I'm already in a position, then I'm probably going to set some alerts and, see if I can get the core position to run and whatnot, have some stops in and whatnot. And then, I might go play 9 holes of golf. I might go take a golf lesson. I might go play some tennis. I might spend some time, with my wife and kid. And then it's back, after lunch or whatnot. And again, it depends, but it's back to kind of potential market focus if it need be. And then I'll check in with like my partner Ryan on the education side of things, see if what's going on there, if they need my help with anything. Typically, they don't need much from me there, but yeah, that's kind of I mean, you want me to go past the
Sure, we're on a roll. Just keep going. Market done trading for the day. What's next?
Wife typically goes and picks up our oldest from daycare, and then it's really quality time with him, playing, wrangling, getting beat up a bit, and get dinner, eat together, maybe go do something fun outside, whatever, bath time, bedtime. And then my wife and I, that's kind of then a little bit more our time there after that, whether we just want to watch a show or hang out, play a game, have some friends over, whatever, things like that. Social wife time, things like that.
Very good. Okay. A day in the life. So when you're starting the day in the morning, maybe before you actually dedicate to trading, anything in there about kind of like stressing your body to kind of wake things up, or brain training on apps or anything like this?
Nope. I've gone through periods. I'm kind of the guy who like pops out of bed and I'm 100%. I'm good. Don't need coffee. I've just always been that way. So I've experimented with morning workouts and whatnot. When I was doing like triathlon and things like that, I would do a little training and whatnot. But no, not part of my routine at this time.
Okay, interesting. Typical day, let's just say on average, how many trades you putting off? Like 1 to 3, 1 to 8?
I would call it 9 or more
trades normally.
Yes, if I'm trading short term, right?
Okay.
Yep. So there's almost, you could put me in 3 different buckets in terms of trades. So maybe that number's a little misleading if you were to actually average out like an entire year average trades per day, right?
But on Tuesday it's usually 9, which is what
that's right. So the 3 camps that I might be in terms of trading is 1, all out pretty short term, and that's going to look like anywhere from let's call it the 9 to maybe 20. A more normal situation would be me trying to do what I call intraday position trading, which is typically going to involve around, let's call it 2 major trades for the day. But I am so tight with my stops and whatnot. I think that, you're like a 60-70% win percent guy. I'm kind of on the other side of 50 from that. I'm more in the 40s. So I'm tighter with my stops, and or maybe just not as good at timing markets as you. And
yeah, maybe just need some help.
I'm wrong a lot short term, right? Before I nail it and get a tight stop and really amplified risk reward on when it ultimately does work. So 2 themes might require 5 trades from me, right? To capture 2 real moves.
Yeah.
And then the third one would be, I'm in a swing trade, or I'm stalking a swing trade. I get into it. I don't have to be in panic mode, delta hedging, because it's working, and I'm kind of free to detach from the desk and do whatever.
Okay. When you're doing your short-term trading, is this like really drilled into a depth of market type strategy where you're just firing on that? Or do you recognize that algorithmic is just beating this thing up right now and you're just trying to get like in flow with some of those short-term moves? What would constitute?
It's my exact NADRO methodology, right? So I'm reading the narrative. I've got a couple hypos coming to the day. I'm looking at, are we above a line in the sand? I'll typically be going unidirectionally, right? Long. If we're below a key line in the sand, I'm going to be looking for that market to go to that next destination area type lower. And then I'm looking at price action, basic patterns, what I call rhythm, which is kind of really getting in tune with, let's say, the ocean, kind of the waves coming and going, the flow, the zigs and the zags of the market, in a very discretionary sense. If I'm getting into a short, I want an up move, right? A fairly normal looking up move, and then it to stall, maybe trap, wick, whatever, and just start to turn. As soon as it just starts to turn, I'm banging in, right? So, but that's within all the contextual work, right? I've identified there's a thesis there for me. We're below my line in the sand. It's all systems go. Now I go to, how do I access the trade? And that's where I'm using intraday VWAP, cumulative delta, order flow, rhythm of the ebbs and flows, price action patterns to nail entries.
Okay. Is it something where when you're prepping for the day, you have a feel like this is going to be a, scalpy, scrappy kind of a session? Or is it once the day is shaping up, you're getting that feel for how today is forming and then you adapt to it?
I tend to know that pre-market. So when I'm prepping, I tend to know this is a very low interest area. Now, does that mean that I know that the day is going to chop all day? No. That means that as long as we're below X and above Y, that's the game plan. Those are the tactics that I'll be applying. And I'm pretty good at recognizing those environments, whether it's just hands off or whether it's get really, really short term and just pick up a few little, nickels and dimes here and there. But then the day can change, right? All of a sudden we start to hold above that key level or below the lower key level. Now, again, going back to the prep, I'm ready for that scenario. I understand if there's implications and how strong those implications might be, to where if the market does start to hold, let's say, below the lower level, it's got a long ways to go before it gets to kind of what I'm seeing as a destination area right now, right?
Got it. Okay. So if you're ever in a trade that is, let's say, one of these 1 or 2 ideas for the day that kind of maybe just goes coast to coast inside of value, or a fresh breakout of value that you're just letting work.
Yep.
Are you ever I should say this, I almost exclusively do some version of all in, scale out to mitigate risk, scale out to secure profit, and then see what I can kind of squeeze out of that last position.
Yeah.
And something I don't really do much of at all is any kind of like campaigning around price or adding into again or anything like this. Is that like a core part of what you do when you realize this is a trade I'm holding on to, this isn't one I need to get out of?
I guess I'm going to say no, it's not a core part of what I do, but I fairly routinely do it. Okay. So if it's a more boring trade inside of value, I'm not going to do much of that. I'm going to really, in fact, I will vary depending on the quality of the contextual setup. I will vary how much of a core position I leave on, right? So I might hold 2/3 of the position for the core. If it's something that I really think has a lot of potential, I might hold 10% as a core if it's something I'm not that interested in holding much of a core, right? So I change that, and then I'll get to your question specifically. If the market, I think the higher the volatility, the more zigging and zagging the market's doing. And if it's clean price action, not a lot of bar to bar overlap, like nice, healthy momentum, like we would wish the market would do every single day. If it's trading that way, I will be much more prone to what we call campaigning around a position, and taking some off, putting it back on. And when I do that, I really like to treat the whatever you put back on as its own trade. Yeah. So that is not going to go stop out at the original entry and whatnot. It's going to have its own stop. I'm going to scale out of some of what I added, right? Just as I did when I put on the initial position from higher or whatnot for a short, for example. So for me, campaigning around a position is not something specialized. It's me saying, essentially, here's one of my trades that I would take if I wasn't already short.
Yeah.
So I've already scaled out per how I, almost always do. I didn't today, actually. I went for kind of a home run today and lost all of it.
On the S&P or?
Crude oil. I shorted crude oil this morning. It went like $1 down straight in my favor. I held every contract and then it went all the way back up. So, that's trading for you. Typically my process is to take a scale on an initial in like that rhythm that I talked about. Okay, that's a decent size move based on the way we're ebbing and flowing. Let me peel some off there. The next place I'll peel some off will be most likely an intraday, what I call DVA, developing value area, that on the session. I use VWAP for that. So like little standard deviations away from VWAP and whatnot. So if I'm short from the one standard deviation above, I like to take, depending on rhythm, the next scale off, let's say maybe into VWAP or maybe on the lower side of developing value. Barring any major intermediate destination in between, like let's say we're running into a composite value area high that I'm short from above, I'm going to give that a lot of priority and whatnot to scale. And then it's down to more of what I call a core position. The interesting thing about what some people get wrong with core positions, and crude oil did not get anywhere near my targets today. That's why I hadn't scaled. And that's why, let me take a look at what it ended up at. Yeah, it ended up kind of lower when I was short, way higher than back to where it all began. I had way lower destinations for crude. And if it would have started to really work, that would have been a really nice one to start to take some off and put it back on and do those kind of things.
Interesting. Okay. Yeah, I like that idea a lot that you said about treating that add-on as its own. This is a spot I would get on regardless, almost like a second entry kind of thing.
Real quickly, a thought, just because I see this a lot and whatnot. Not everything that I'm saying, because let's face, most viewers that would watch this podcast with us here aren't consistent profitable yet, right? They haven't really made it yet. So what I would like to say is that a lot of the very discretionary and very broad tactical ways that I will do this on one day and this on another day and hold all my position today and don't do it the next day, that is horrible advice, if you will, for newer traders, in my opinion. Newer traders, even just developing traders with a lot of experience but not a lot of success, you need to get really, really dialed in with a process. Be very checklist driven. Don't mix and match styles. Get really, really good at doing something in particular. It doesn't have to be just in one market. I don't believe that. It's okay if it is. I think that can be harder. But earn the right in your trading to get more and more and more discretionary, right? Tennis, for example, like before you decide like you're going to do this fancy tactical play and change up your strategy against your opponent and all these kind of things, it's like you probably need to get drilled on like how to hit a backhand or how to, before you start trying to hit a bunch of different fancy serves to start the point. How about you sit in your bedroom, as long as your ceilings are tall enough, and you practice your toss, getting your toss in the same spot every time. Traders, for some reason, think that they can just go to the most advanced levels of trading before they master fundamentals and master basics. And it really, really lengthens the learning curve and the frustration levels and the capital losses and the mental anguish and everything. So anyways, I'm an open book in terms of what I do, and I love to share all that stuff, but I do like to give that caveat to, probably the majority of your viewership here.
Yeah, no, there's so much wisdom to it. And I think this idea even of just having the awareness to understand where you are at in this journey, because there might be times where you need to do something that isn't a great idea to do long term. Maybe it's not even that sustainable, but this is what you need to be doing right this second, because you can't even get yourself to put on a trade. So you need to just put on one contract, hit the button, and as soon as you get green, just take it off. Like just get yourself to actually push the button. Or, some version of getting up on the day and then being paralyzed, just getting yourself to do something extra, dropping size all the way down, whatever it is. I find a lot of times, and I've been through several of these things where to get over whatever my struggle is, like I just need to do something very specific. And then once that issue is not an issue anymore, I probably don't want to keep doing this because I'm maybe missing a lot of potential or something like that. And to have that awareness of this is something that is maybe I need to do someday, but not where I'm at in the game right now. It's a very hard thing to tell people, but I think it's very hard to analyze ourselves to be aware of where we're at in it. But there's a lot of wisdom in being able to do that. Okay, you said that you were around 40% win rate. I'm kind of curious because what would you qualify as a loser? Just a trade that ends in the negative P&L or a trade idea that fails even if you're in the green?
Oh yeah, any round trip, right, flat to flat, that is negative is what I'm considering a losing trade, loss.
Okay, interesting. Yeah, that actually surprises me that with 40% winners. Do you, when you put a trade on, then
mid 40s,
Yeah, interesting. Because I often think I go for a higher win percentage right now, and right now the market's not been great through July for me, so I'm a little under 70%, like in 60s. But typically it's fairly common for me to week be somewhere around 70, sometimes higher than this.
What about the other side of the expectancy formula for you? Like what is your actualized risk reward tend to look like?
My risk to reward, a lot of times I'll take it if it's just like 1-to-1.
I figured, but typically, there's no free lunches, right? Typically someone with a higher win percent is sacrificing risk reward, right? And that's the thing. That's the cool thing about trading, is that there's not one way to do that. There needs to be an understanding of what we're talking about here by nature, not that I'm saying that I'm better than you at all or anything like that, but by nature of me approaching the market the way I am with a lower win percent, the lower win percent is the reason how I'm able to have higher 2-to-1, 3-to-1, 3.5-to-1, sometimes a 12-to-1, right? Like big risk reward. Whereas if I were to say, hey, I'm going to go a lot of times take 1-to-1, maybe even a little less than 1-to-1, that win percent, right? It's like you can't have them both. You're never going to meet a trader, an honest person, who says, yeah, I'm 75% wins and 4-to-1. No, you're not. It just doesn't exist.
Yeah, it is interesting because I've had this thought with myself of, and I would actually be interested in your input on this. If my niche, like the thing that I'm just better at in the market, is being accurate, getting in, getting out, not going to see very many of my trades go, like let's say on the S&P, go over like 9 points, but not letting a lot of things roll back on me, getting those scale outs, even trade ideas that don't really work, I'm still bringing something in on those. As opposed to dealing with, or if I would actually be making a lot more money if I could get over that fact of struggling with being right, or going on tilt when things aren't working out, and just be more at peace with it. And it's almost, I don't know if it's like a growth thing for me, to where an evolution of my trading would actually be to hold on to these things longer and to not micromanage them. And also, I would say one of my biggest issues has always been overtrading. And so, I'm actually
most situations, overtrading, from my experience, overtrading comes from exits, not entries. People are looking at the chart and they're like, I overtraded. I got in at too many different places. And in reality, what's going on is that they were emotional about an exit, and they have this longing to be back, to have that position back on. And so then they're putting themselves in a compromised position, because now all of a sudden they're never going to get that great trade location that they originally got. And now you're chasing. And anyways, just a quick thing there.
Yeah. No, you're exactly right. And it's interesting how many things are something on the surface, and when you really drill into it, it's just like a whole different thing that's actually, causing this issue. But anyway, I would be interested, just as, and you might not even have enough information to speak into this, but do you think that in most situations, it's better just to identify that, hey, this is kind of your natural aptitudes, and it seems like this is where you can thrive more, and those abilities to have, some of these trades go 9, 12 points in your favor and then roll all the way back on you. You just can't handle that. So, lean into be a little bit more scrappy. Or, if you want to evolve as a trader, you need to be able to capture some of these bigger moves.
If I can collect my thoughts there, I had so many while you were laying it out there. Number one, it's really important to really dig deep and find out if, and it's typically only one way, if your scalpy, quicker exits, peeling off risk pretty quickly, you have to search and really, really, really come to the truth of, are some of those done out of discomfort avoidance, right, emotionally, or are those done in more of a process-driven, tactical, repeatable type way, right? Because a lot of people will go about a more scalping approach under the guise of it's my niche, when in reality, they could never move past what is one of the hardest things in trading. Everybody from Jesse Livermore to, us here present day talking about it, is holding trades, right? So I'm not saying, that I don't claim to know which of those it is. My recommendation is for you and everyone else who's there to really search yourself and try to find out. And it could be, there's some signs. So for example, I was working with a guy the other day, and you see these clusters of exits around the same area. Okay. When price is like, it's reached an area, he took a scale. That doesn't tell us any information from what I'm about to say, right? That's just like a normal looking thing. But then if it kind of moves around in that area and you take another one, and then maybe there's a little blip or whatever, and you take another one, to me, that says emotional trading. I say, hey, point to the process behind you taking those scales. And if the guy would have been like, oh yeah, if the market stalls within 0.25 ATRs in the session for at least 8.5 minutes, I'm required to take another scale. You know what I mean? But no, that's not what they said. So it was really enlightening for them. They didn't realize that they were doing that. So that's the first place, is to search yourself. And I guess the prerequisite there actually is to have a process and know a process. Where do you take your best scales with market generated information, right? Like, what does that look like? For people who are really touchy-feely on the tape, it gets tough because you see all these little blips. I think being touchy-feely on the tape in terms of trade management, beyond an initial scale and beyond looking for direct momentum or something, is actually a mistake. I think by the time you've taken a scale or two on some direct momentum, you time the trade really nicely, I think it's time to zoom out. I think it's time to come off of the dome, to come off of the footprint, come off the cumulative delta, come off speed of the tape or tiny little bar-to-bar candlestick action, zoom out. What was the idea for this trade? Where is it? Is there any more major potential left for it? Things like that, and to approach it differently. So that's the first thing. You want to talk about that, Andy?
Please.
Or?
Yeah. No. I think the emotional discomfort is, and I think I'm actually maybe even confused about this myself, because I really feel that my sweet spot for some reason is within that. And I really focus on the S&P, which I trade other products, and it's probably the same, different over there. But the S&P, let's say, somewhere within like those 9 points of moves. And I don't know why it's like so consistently this, and it's so consistently that it kind of feels like it's just an emotional thing.
Yeah, but I mean, not 9 points is a very different term in different, I'll throw this in there, VIX conditions, right? Sure, 9 points on when we're having 150 handle days is one small rotation over a few minutes, and 9 points during a quiet summer grind is 80% of the range,
right.
So I tend to take issue with people who say, I always trade with 2 point stops, or to me, 9 points is like I tend to push back on that.
Yeah. Okay. Very good. So when we are, and this is actually something I'll do as well. I'm a big fan of, there's nothing about my system that's 4 points of heat, always take off the exit or something. And there's always a place where the trade's wrong. And I think when I started, the normal rotations was, if you were going to scale out, you were probably looking for like around 2.5 points. And it's very difficult for me to hold on my first scale out past that. And even in a situation like today, where once we broke out of that early morning kind of lull on the S&P and we really started dropping and the volatility really widened out, I was very clean action. And some of these rotations were 12 points, 8 points up, 7 points down, even knowing that that was the size of these first rotations.
Yeah.
Still very difficult to hold past that, 2.5 points. And I don't know if it's just like ingrained in me that, hey, this is where I'm supposed to hit my scale. But I think getting that first scale out too, and then I usually have two other amounts that I can do something with. That kind of changes the game a little bit there too, because I've scaled out, I've mitigated my risk at some level, and now I'm looking to secure profit on this trade. And so maybe I have a little bit too much discretion with locking that in instead of just letting the trade
even
work
people,
out.
The concept of just, well, this is to mitigate risk, this is for profit. Those are almost like mental constructs. They're all the same thing, right? Every time you exit some, you mitigate risk, even for the ones that you say are to take profit, right? They all mitigate risk, and they all book profit, right? So I think maybe go back and take a look at, you mentioned like 2 points was a good place when you first started like taking scales and whatnot. What was it about the market generated information at the time that made 2 points a good place, right? You could even go into, are you familiar with MAE and MFE data?
Of course.
Okay. It's some of my favorite data points out there, man. You can really start to get a sense of, over the life of a trade, how much heat did I need to take in order to see it? Forget what you actualized, right? MAE, MFE is not about, it doesn't matter where the P&L ends up. It only matters during the course of the trade. What was the most it went against you? Think of it more so in tick terms, like the actual units of the market rather than the dollars and whatever P&L. How far did it go against you? How far did it go in your favor? And then ultimately comparing that with exits, how much of an exit at any given tier or in thirds or whatever you're doing there. You can start to say, wow, I'm taking off a third of this position very frequently around, for trades that work, and a lot of your trades work, around 15% of the max favorable excursion. I would tell that trader they might be leaving a lot on the table for that initial risk that they took, just hypothetically, right? So look into data, look into yourself, look into market generated. I'm a fan of being as dynamic as possible because volatility conditions are constantly changing in markets. Sure. And so I always try to encourage people to look past fixed numbers. And the other thing I would say is, you alluded to at the beginning of this conversation about how much you hated seeing that nice open P&L disappear, right? I have found that most people fall into one of two camps in terms of which of those things trigger them and that they hate more.
Okay.
Some people, like yourself, hate more an open profitable position that comes roaring back and it all disappears and maybe you even take a loss on. Can't stand it, right? I've read some trading books and they say never let a winner turn into a loser, blah, blah, blah. Hate it, can't do it. Other people, such as myself, actually can't stand when I, let's say, trail a stop, right? Like you might, or take more off along the way, and that baby runs to that target that I knew I could see it doing, and I'm not in there holding any position anymore because I emotionally flattened out or whatever. I hate that worse than open P&L disappearing on me. Today in my crude oil trade, I kid you not, brother, I have zero stress, zero. It was a lot of open P&L. No regrets. I really don't. That trade could have easily gone 5x of where it was. and that's what I was going for, and it didn't work. So, didn't make anything.
Yeah, very interesting.
I find that most people are pretty easily strong. It's like, are you left eye or right eye dominant? Like which of those do you hate the most? And then I think it's okay to structure some trading around giving yourself the most joy and least pain based on your natural makeup and aversion for that.
Yeah, it's interesting because when I look back at times where I've just been on tilt and I just lose it, one of the biggest, and even some of the actions I do during the day are structured around, I realize that if this happens, the likelihood that I might lose control is just high. So I just can't get in these environments. And one of those is letting these trades roll back on me. It's very easy for me to slip into. Then all of a sudden, if you looked at the chart, one trade rolls back on me, and then there's 8 trades that want to just follow right after it, Yeah. And so part of even the way I'll manage a position is, if nothing else, to understand, like, I got to keep myself out of that tilt area. And it's very, very easy for me if I start seeing trades roll back on.
You guys at home, like, listen to this wisdom, because it's huge. Each of you have to begin to know yourself like that. You have to start to learn your cues, whether it's body language, whether it's a typical sequence of market events, like maybe 2 losses in a row. It's, I let where I should have taken profits, I let it all come back against me because I was just, doing whatever, trying to get a little more out of it, being greedy, whatever. Find out what those triggers are and cues for you. And then you have to implement like mandatory breaks until you can get to the point of the next shot is more important than the last mistake. Until you're there mentally, you're not ready to put on the next trade or you're just not objective enough. You have to do a mental reset, get yourself back to that place, whatever it takes. For at the beginning, it might mean you don't get to come back and trade the rest of that session because you're just going to be a disaster. And then maybe an intermediate stage is I used to do this in New York sometimes. I'll walk around the block, right? Get outside, just get some sunlight, walk around for a second. An advanced stage might be a couple of deep breaths, right? Just getting to a place where you can just really calm yourself, and then truly, not like lying to yourself, fake it till you make it, truly get to a place where I know how much harm I've caused myself in the past by latching on and fixating to whatever negative thing just happened. And now I have self-awareness. Now I know myself. I know what the monster that I'm capable of being, myself included here, guys. Now I am happy to get to a place of, hey, the next shot's more important than that last mistake. We'll get to that in the review session afterwards.
Beautiful. And I think these conversations are very nice. And it's interesting talking to you about this, and just even some realizations I'm having as we're talking about this. But something you even mentioned is it's crazy how easy it is to convince ourselves that we're doing something for a very good reason when it might just be absolutely sloppy trading. And I find this with people who try to do momentum entries a lot. I'm kind of a big fan of don't enter on momentum, because I find a lot of people that think they are entering on momentum, they're just getting way out of timing, and they're just
like buying highs and selling lows.
Yeah, they're just getting way out of the natural, like you said, ebbs and flows. I would call it like the timing, but and then they justify that as, I'm getting momentum. And it's just wild how easy it is to just be doing bad things and then justify it to yourself like, oh, this is actually a good reason why I'm doing this. But talking to somebody, and especially looking, thinking through these things through, very enlightening. So really good, really good. You talked a moment about, and I think this is maybe one of the biggest sticking points in trading, is just, I like to think about it like I got this inner goblin inside of me that just wants to rear up and just do crazy stuff. And maybe a big part of my day is just trying to keep him under wraps all day long. When it comes to whether or not I should be working out, what should I eat? He wants to have pizza and ice cream. I know I need to eat other stuff, and it's just kind of like this divide. And when I'd be interested, when you're trading, I imagine you have that same type of thing where you have these impulses that maybe are lessened, but they're still there. Maybe it's, you feel the need to do something when there's nothing to do, or, you feel those impulses and you stop yourself. Do you have a dialogue or some thoughts that you run through in those moments? And where I'm going with this is I've thought a lot about this, and I've realized that you can't just stop something. Like if you're mad, you can't just stop being mad. If you're sad, you
Correct.
can't just stop being sad. You've
Correct.
got to be able to have some willpower and to transmute that thought to something else. Like take that thought off of being mad and don't just stop, but do some, think about something else. And
Yes and
so
no.
what's that?
I said yes and no.
Okay. So for me, a lot of times if I'm, for instance, I feel the need to kind of do something and start overtrading, I'll stop myself and I'll replace it with that thought of what is my trade idea? And if I don't have a trade idea, part of my framework, there's nothing else for me to do if I can't answer that question.
Yep.
Or a lot of times I want to micromanage a trade and I've this thought of maybe I win, maybe I don't. And just I found that to be so powerful of kind of like releasing this energy of I want to do something that I know I shouldn't do. And if I can just think instead of getting out of this trade, if I can just think about maybe I'll win this trade, maybe I won't, it just kind of like breaks it and sets me on a different path.
Absolutely.
Anyway, you have any thoughts about that topic, or do you have some like go-to phrases that you repeat in your head while you're trading to keep you in track?
We could talk all day about this, and it's at the heart of emotional, mental performance, right? Like trading is emotional because it deals with money, failure to very high levels that kind of attack us very easily, right? And trading is also, let's call it 100% mental, because we don't really, I'm a firm believer in like getting proficient with your platform and being able to use hotkeys and things like that to be quick, but it's not like it's a bunch of like finger dexterity required to be a good trader, right? So it's all mental. There's so many things to talk about here. Number one, I'll start with, we all start at what I refer to as natural human traders. Okay. The things you were just describing are not unique to you, right? You're not like some broken individual that has like problems, right? We all deal with these things. So we're all, it's part of the understanding of this. And everything is about like, let's build up a really strong like foundation of like mental understanding. Okay. So one is we approach this game from a flawed place. We are not wired to do this well. Okay. So let's just admit that and sit back and relax for a second. Okay. So that's number one. Number two is a big thing to lean on is that markets are random. That's right. You're hearing it from me, somebody who makes their living trading markets. They're random. Crude oil today was a coin flip, whether it could have just absolutely tanked and gone to my major target, or whether it absolutely reversed. I suppose at the maybe the same time where equities started to sell off. I don't know what happened. I don't keep up with news. Anyways, whether one of those two things happened or something in between, it's random. I have no idea. All I know is that the things that I can control, all I know is that if we are holding from a bearish line in the sand and I get my shorter term tactical opportunities to enter and put that risk on, it's my job to do so, right? So a lot of people, for a third thing, so we're natural human traders, right? We're not good at this naturally. Markets have an inherent degree of randomness that we will never, ever get around. And a lot of what I'm talking about there is drawn from a lot of like Mark Douglas type teachings. And then like a lot of people get into trading because they think ultimate freedom, flexibility, blah, blah, blah. And in reality, like you've got to work harder than you ever worked anything else in your life. You've got to commit more time. And like my Tuesday that I described to you, it used to look like 16 hours in front of the screens. I kid you not, right? I was grinding. All right, so where else should I go with this? We need to understand ourselves, that we're not great at this. We need to understand superior ways of thinking about markets. We need to learn how to redefine success and failure. It's like any person. I'll go back to tennis again. I put a tweet out about this recently. If you're totally winning and losing is totally defined upon like the actual outcome of the match, you're going to have more nerves. You're not going to be able to perform at the highest level. If maybe you tell yourself something, as you were alluding to earlier, can bring yourself back to a place of what's my job at hand right here? That's a very powerful, what's my game plan, right? Do I have a valid trade or whatever it was that you asked yourself? If there's not a trade there, then we're not going to, do something, blah, blah, blah. So laying a good foundation, a changing of your thinking and understanding of markets and what they're really all about and what trading is really all about, rather than just finding that magical formula, whatever. Now you're able to start to evolve in your thinking. Now the fight or flight instincts, the getting pissed off and really, really mad when a trade doesn't work, right? And you did everything correctly on, right? Like one of those trades, it actually literally doesn't swell up the type of emotions that it used to, because you now have a superior way of thinking and understanding. And you are more like, let's say, the casino that doesn't start freaking out and flipping out just because some dude walks up and puts $5 grand on black and it hits, right? Should they start worrying about changing the game of roulette or doing something? No, it's a loss. That's what they're there to do. Give him some drinks, he'll give it back. Let's keep the sample size going. Sample size is important for traders too. So anyways, I'm rambling here, but it's just such a thing I just feel so strongly about. It's a major, major issue for traders. We just have to start to think about what we're doing differently so that the emotion isn't so strong and we don't spend the majority of our day trying to muster up some form of willpower to not do the right things. We can actually, to a certain degree, we're never going to be perfect, but we can rise above, at least in terms of severity, of those emotions that naturally flare up in trading and whatnot.
Yeah, but 100% agree. And I think it's very nice. You said a couple of things that have been very interesting to me as of late. One of them just being what trading actually is. Like, what is our actual job? What are we actually doing here? I think there's a massive disconnect from people that want to start trading and just understanding like, what is the, like, almost like, what is the world view here of how we view what we do and what our job actually is. And you also said rethinking what it means to have a successful trade,
to win or lose.
Yeah, and it was very wild to me. I just take a break from it kind of recently, but I was doing this kind of like live stream on YouTube every day, and it was amazing to me how many people reached out to me to say, I can't believe you're actually showing the trades that you took. And to me, it wasn't this thought of like, oh, I'm embarrassed that I had this losing trade. And people commented on it all the time, not even necessarily in a negative way, but I think it was like this shock of, how many losing trades that I have, or how many trades fail, how many trades don't work out. And it's such a normal part of the day of like my trading experience to have trades that, one out of every however get in and go straight to target. Then there's this wide variety of almost there and don't get there, immediately go against me. And I think that is not talked about enough. And there's a very wrong expectation about what the burden we put on ourselves to try and, in this environment where it's going up and down and where we truly have no idea. I think
it's not about perfecting analysis that should lead to a winning trade result. That's not what trading is about. But I think that's the love affair when people get into it, is they try to find that the best system, the best magical whatever. And I do think there are analytical tools that are better than others, right? I think you and I would both agree that profile it can be a tremendously powerful market worldview to lean on.
Profile we trust.
Yeah, much more so than, let's say, Elliott Wave or something. I would, I never really met a great trader that would disagree with that. So there are better tools in some senses of the word, but that doesn't mean there's one tool, or if you don't trade with profile, you can't make it happen. Like that's just not the case. But it's really, really important to move past the amateur rookie level of thinking that the better your analysis you can get to, that your trade should then work. That's toxic, right? That will only lead to, where does frustration come from? A disconnect between what you want to be and reality, right? And if you want the trade to work, and it should work, and it doesn't, now you lose the whole purpose of any trader psychology, which is objectivity. When you lose objectivity, you can't see the truth of the reality of what the market's telling you at the hard right edge. now you're doing things like we call, on tilt or whatever.
Yeah, very difficult topic to touch on because I don't think this makes a lot of sense because there's not, it doesn't really track, it doesn't map onto anything else you really do in life. Typically, you do certain things in life in this environment where I did the right analysis. I prepared very hard. It should have worked.
An attorney or a surgeon or like whatever, like you're gonna get paid for those results, right?
Yeah,
trading,
exactly.
you can do everything right. I think sports comes the closest, really, because there's so many like random freak occurrences. This ball just happens to get tipped this way, even though like the quarterback executed perfectly, blah blah blah. Like stuff just happens, right? And markets is that to the extreme. And another thing that's really important that if we take it back to the beginning of you asking this question, you talked about you kind of became aware and you had like, let's say, an affirmation for yourself, right?
Sure.
Well, let's not gloss over the fact that you were aware. I draw a little diagram for people all the time that says we all have these impulses and thoughts and desires and feelings and whatever. And the way it typically works is people go whoop, straight to that action right here.
Yeah.
Right. It just goes and you don't think about it until it's done. Maybe even then, right? You cannot trade that way, especially for someone who isn't trading very successfully at a very high level. You can get more intuitive. You can lean on that a little more. But at the beginning, you can't just zip to that action. You have to insert a skill of self-awareness, which you can develop through meditation, all kinds of things like that, visualizations. You have to be able to be aware and slowly through work and effort and journaling and all that work that we do to shorten the time span between, oh, I made a mistake earlier today trading, to then, oh crap, I just made that mistake on this trade. I knew I shouldn't have done that, to, I'm about to make a mistake. Let's not make that mistake. That's the pinnacle of self-awareness. You start to learn and be aware of what tends to lead to you making a bad mistake, or you're just simply aware of the potential actions that you're desiring to make, right? You got to have the self-awareness. If you don't have the self-awareness, impulse, action, over. Done. You're not in control.
Yes.
In addition to the self-awareness, you then have to filter, just like you did, filter what you're seeing, feeling, whatever, through a process for decision-making, right? So, my traders are the same way. Like if you're going to put on a trade, that needs to be one of your trades that you had a hypo for this morning. There's a million ways to access a trade, right? But in terms of I'm bearish the S&P below here, that's one trade idea. And if that's not one of your trade ideas and we're below your bearish line in the sand, I don't want to see you getting long.
Yeah.
Right. So having a process for that, having the self-awareness to then funnel an impulse through a process for thinking about something is huge. I think affirmations used to be a huge part of my development. They're not anymore, but it's something I really teach people to do as they're trying to improve the self-awareness, talk themselves, self-coach themselves through doing the right things when it's hard to do so because emotionally it's tough. Another one of my recent tweets is probably my most famous saying ever. It'll be on my tombstone. My process is a better trader than I am.
Okay.
You see how that's exactly this conversation we're having? My process is and I really mean it. If I were to just like make trades based on how I feel, those are not going to be as good as when I feel something, funnel that through a process with market generated information and whatnot, and then make a trade. My process is way better trader than I am.
For sure. Big time. And do you have any, you mentioned meditation, and this is probably the sticking point for so many people of they just can't move forward in their trading because they have these impulses, they feel these things and they immediately act on them. And then everything is just done. Nothing matters anymore. My solution to this, because I recognize it's the problem as well, is that this is where meditation becomes very powerful, because the practice of meditation, of just kind of letting your mind wander, realizing it's wandered, and then bringing it back. That
to just focus on breath, just
catching your thoughts. Yeah, exactly. And then that translates, it's almost like wax on, wax off, where it feels like you're doing nothing. But then in the, when somebody throws a fist at you or when something happens, you can actually create that space that you talked about to where I felt this, instead of going straight to acting, I'm able to catch that.
You observe it. Yes.
Yeah. Besides meditation, any other tip, or is that kind of the solution? Just you got to be meditative.
Well, I think that more people in 2023 need to find ways of doing things that are meditative. Okay.
Okay.
Everyone is scrolling, short attention span, entertain me, blah, 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 right? And they don't, that's why I talked about my morning routine. And one of the first things I mentioned was connecting with myself in that way. People don't find the time to be still, to be quiet. And, there's a lot of different things that could be. I really think that, again, some sport, like, for example, cycling, or different things where it's not requiring a ton of thought. It might be a little physical, but you can kind of drone about it and do it. Going for a run, all these things are very meditative. And doing those things, I believe, also to a lesser degree than like focused meditation, where you're recentering the thought back on your breath and whatnot. They can be very helpful as well. And for people that you were describing, I would also, because a lot of things just don't show up in trading in an isolated way. If someone is unable to control themselves in the trading world, I would also look to other areas of life and see what you can draw on, not only from a negative place, but from a positive place. What area of life do you face adversity and you're able to do the right thing? What did you draw upon from maybe some of your core, like character traits or different morals or standards or whatever? Like, what do you draw upon, right, to when you were successful in that regard? And try to channel some of those things. I learned this from Dr. Steenbarger, right? Just everything. A lot of guys in trading, they just want to focus on the trading and maybe their psychology with the trading. But really, in the broader scope of your life, you can bring things into that, and it can be very, very helpful.
Yeah. Age-old problem of looking outside is a really beautiful quote. You don't have a business problem. You have a personal problem that's showing up in your business. And to make it really personal for us, we don't have trading problems. We have personal problems that are showing up in our trading.
Sure.
And there's no reality where you have these undisciplined, disheveled parts of your lifestyle, and then somehow they just go away when you sit down on the screens and there's all these extra elements. And I think this is one of the beautiful things about this trading journey is it forces you, there's no way past this, it forces you to just be a better person, like to be more in control of yourself and to have more awareness and to be a better performer. These are things that there's no
a lot of humility.
Yeah. It's a beautiful thing, the journey of trading. I have a few things I really want to bounce off of you before we end here. And I know we're kind of over time already, so if it's okay, I'll kind of speed through some stuff.
Okay.
Not to just jump off that topic, but to your point, I think it's we said a lot about it, and we could probably talk about it for hours. Can I ask you this? You have a perspective being, in a much bigger environments that aren't just retail related. I am on a journey of just still growing and scaling and kind of seeing how far I can take this thing on my side. And I'm curious to you, as far as from your perspective, actively intraday trading exclusively, nothing longer term, trading futures, is it realistic? And does the scale work to where this could be $1 million a month business?
Yes.
Yeah. 5 million?
Intraday trading, the most liquid futures products, yes. Now, if you were only, like you just wanted to trade nothing but outright, let's say corn futures, right? And they're on my list of 14. They're one of, the top kind of liquid ones. They're not like S&P, obviously, but you're going to run into issues there, right? Like it's the thing you run into is hiding. You have a harder and harder time hiding, and that becomes problematic. You start to need ways of disguising what you're doing, spreading it out, randomizing clip sizes, perhaps even using different accounts. Because it's a competitive space. Like if people can identify you as a player, think about like, when there's been different runs on different firms, or, cornering different markets, or people getting squeezed out of things. Like this is what markets do, and other participants want, to kill you. So, you and I don't necessarily feel that way, but like the big, that's the design of the game, is to extract money from each other. So that's the big thing, is keeping that level of anonymity is a big deal, because there's size there's great, all that good stuff.
Okay. You mentioned that, you said earlier that earlier, a younger, more novice Merritt on a Tuesday would be spending 16 hours in front of the screens. I think, in my perspective, there's a lot of trading is weird, where it seems like the work of trading is when the market is live, but this is actually a very limited to how much hard work you can put in when the market is live. In a lot of cases, the more you try to do something aggressive or force, or the more you try, you can actually just do damage.
That's
so
right.
If somebody is looking to say, okay, the market's not open, but I want to work hard at this business, I think this is a big issue where people don't understand what the work of trading is. Let's say you want to put in an extra, 3, 4, 5 hours every day into your trading. What would your recommendations be as far as the actual tasks, or how you would, where you would put that time, as far as maybe drills or? Yeah.
Just so people are serious about this, let's put this again in the perspective of sports. Yeah. Is the time spent, on, is it during the Super Bowl, or was it the months and years, even outside of other actual games that they play? Just the work in achieving greatness is outside of the performance. A concert pianist, right? Is the work when they do the show? Yeah. No. Right. That's the performance. Okay. So let's just mentally get really clear about that, in case you're going to gloss over this section, right? It's really important. Getting better is the work outside, of the opening and closing bell. You can, and to dovetail in real quickly with what you said, you can do outside of trading hours work during trading hours. I think that's actually really important that people do that. When you are sitting in a trade and you're just holding a core position, and you really don't have anything to be doing, you're just babysitting that thing, do some other non-trading, working on your trading things. For different people, it's all kinds of stuff. Maybe you've got some skills, you can do some testing of ideas and back testing. Maybe you've been meaning to get more familiar with something like a new market that you're wanting to perhaps start trading. Go run some replay, go pour through short-term price action, study its order flow, learn a new market, right? Things like that. But in general, the preparation, okay, so prep, that's before the market opens, that's huge. A ton of work needs to be put in doing a really good prep. I think it needs to involve not only the charts, but also yourself. So there we go. Spend some time with coming up with really good affirmations that put you in a good place. Improving your self-awareness, improving your overall just narrative, as I call it, reading ability, contextual multiple time frame reading ability. And then during the session, work outside of clicking buy and sell, I think is very, very importantly, journaling. You need to be, journaling what strong feelings and thoughts you have. And you don't need to judge yourself for them. You just need to get them down. And then you'll get to a place where hopefully you learn so much about yourself, and you start to pick up on cues and triggers. Oh, look, strong emotion. For me, I would lean forward in my chair. I noticed a posture. And I would start cursing under my breath. I would start like mumbling and like kind of cursing at the market, directing it. So whenever I, found myself doing that, which, think about it, like there's a lot of people who live their whole lives who don't get self-aware enough to realize that they're even doing that. And they're just like, screw that, blah, blah, blah. And that's just the way that they're being, and they don't observe it and think about it. So journaling, interesting sequences that you see in the market. Something just happened. You didn't understand it. It was a confusing move. Maybe you didn't trade it well. It doesn't really matter there. Jot it down. Okay, 10:37 a.m. Interesting, weird seller, blah, blah, blah. Something happened on the S&P. Then let it go, right? It's not a part of your process to, otherwise you would know what the information from the, from that variable was. Then go back, and we'll talk a whole lot later about review. But that can be a part of your review, is to, interesting observation. Let me go take a look at what that was. And you start to collect samples. And then all of a sudden, now your pattern recognition skills are getting better because you've screenshotted and documented samples of things that you thought were interesting, but didn't quite fully understand yet, right?
Yeah.
Trade rationale is a big one. A lot of guys I talk to at the end of the day who aren't doing good journaling work, they stumble and try to figure out, well, I say, why did you get in here? Why did you exit there? And, you can kind of fabricate an answer sometimes good enough, but like at the end of the day, you really want to really document why you did any entry, partial exit, full exit, scratch out, add, any of those trade decisions. Jot down the whys, right? So that you can review it later. It's very important. You're not judging yourself in the moment. You're just documenting why you're doing what you're doing.
To kind of jump in there at this point, because this is, I think, is very interesting to me. I've thought a lot about this. One of the things I've thought about a lot is, why is trading so hard? Especially with the idea that it's either going up or it's going down. Like, just so many things happen inside of that. And one of the things, we've talked about this already, we don't have trading problems, personal problems. They show up in our trading. And you were just talking about essentially decision making, and thinking strategic or just making a good decision is very difficult. And I think every time we're in front of the market, we have to just make good decisions. Even if we're not doing anything, the decision to be patient is a decision.
But the problem is that people equate the result with whether the decision was good or bad.
Well, for sure with that. And where I was even going with it is, I think the average person struggling with their trading, the average person in general, actually doesn't know how to just make a good decision. And I know in my life, I came to this point of just realizing it. My life is a culmination of decisions I make, and I've never put any effort into how do I make my decisions. Nobody's ever taught me how to make a good decision. How do I even make decisions? Like, what do I do when I get information? What are my principles that I can, base this on, or a framework that I can run things through to make, and I think with our trading, we are forced all day long to just make good decisions. And you were just talking about strategic thinking, and there is a huge gap in that, of just the ability to make a good decision all day. And if you can't make good decisions, you can't, be a good trader. Side note, but please continue.
Yeah, no, that's fantastic. And I totally agree. So the journaling is a huge component. I know that's during the session, but again, it's not trading. It's doing other work other than buying and selling. And then again, if there's downtimes and lulls, you can do some of the work. Could be investing in yourself, right? And that can be getting that workout, taking that break, getting some fresh air, feeding your body, staying high, whatever it is. Investing in yourself is a big deal. And then review work is huge. How did the market play out relative to that pre-market prep? Were your levels good? Was there something you missed? For me, did I go and deploy capital in the right market if I'm, picking amongst, 12, a dozen markets? A lot of people gloss over that one. They review the trades that they made, but they don't review how good was my narrative read, that overall contextual read versus what happened.
I've actually just been having that thought a lot lately with myself. And it happened to me yesterday, or maybe 2 days ago, on the Russell specifically. And I find myself with maybe putting my attention in the wrong place, where there was a much easier, much better setup and movement happening on the Russell, but I was here drilled into the S&P and didn't even pay attention to that. That's actually been something that I've been thinking a lot about with my own self.
Yep.
And you said
Yep.
most people struggle with it. It's a big point.
Yeah, I mean, one thing they say at SMB, I think Bella says this in his books, like you're only as good as the stock you're trading, right?
Yeah.
So if you're over there duking it out with the S&P that's stuck in the mud and something else has got that nice free flowing movement, or like I said, contextually is a fantastic setup versus something that's opening in the middle of a 2-day balance. And, maybe it could break out, but for the time being, it's really, choppy and rotational. So reviewing that prep work, that contextual work, reviewing all the trading decisions, and you're going to have some game film to review. You're not just going to search yourself and say, now, why did I do this? And was this good? This worked. So that was bad or good or bad, blah, blah, blah. You're going to go to that journal. You're going to go look at those entries you made. You're going to have some real black and white data staring you in the face as to why you did what you did. And what's interesting also, one more thing on go back to the journaling is really important. Anytime you have an idea for a trade, those need to go in there really quickly. Like, I think I might like to get long the S&P, or I think I might start to stalk a short in the S&P. And with timestamps, they need to be there. Why is that? I'm so sick and tired of hearing people that tell me, I knew it was going to go down. I thought to myself, this is a great short, I should do it. And I didn't do it. And I dicked around with these longs, blah, 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 whatever. We have 1,000 thoughts an hour as we're staring at these screens. And yeah, I bet you one of them was maybe you should short. And that thought that you had that you're latching onto to tell me that you should, woulda, coulda, shoulda, you actually don't have the skill to do it. You actually don't have a process for identifying that trade. You're lying to yourself and you're wallowing around in your own pity party. So jot down real potential trades that you think you see, even if you don't end up executing them. So let's quit lying to ourselves about what we can or cannot see. Review work. I mean, any kind of like major mistakes, for me, I tend to like really kind of like be a little too critical of myself and others. And I focus on what I did wrong, what I did wrong, what I did wrong. And one of the things that I learned, in New York from Dr. Steenbarger was I need to be a better coach to myself. I need to not only try to constantly, build from, weaknesses, but from strengths as well. And so you need to take a look at each session, not only the errors you made, the things you need to improve, things you need to work on, but the things that you did well and that you want to continue to do well and that you want to build, strengths from and everything that your niche, things that you do well, what's working, all that review work. You need to keep a trade log, right? All my guys, we use Trader View, VUE, because statistics are a big deal. I don't think you need to dive into your statistics every single day because the sample size is just too small for most of us. But definitely on a weekly, monthly review type basis, which should be done at the end of those periods, statistics need to be a part of the review, right? How's that edge evolving over time? Is something different with my win percent than it has been historically? Dive in, from a kind of a bottom up, like what's going on. And then market replay is something that most good platforms have. But if you struggled through a sequence, if you want to work on a particular skill, whether that be mental or physical execution, market replay is a fantastic tool to replay a difficult sequence, do something better, not just with because what happened from the benefit of hindsight, but even for people who are like me on the 16-hour grind, I would close my eyes to where I could only see the scroll bar of the chart. And I would scroll it back to like a random date from 8 months ago. I have no idea what's going on in that market. Start the replay. And now I look at all my charts and you get more repetitions, more reps. And market replay typically needs to be done with some type of improvement in mind. Yeah, you can do some market replay where you just kind of do the whole kit and caboodle of trading. But more times than not, I think people should use market replay to do something specific. I am struggling with adhering to my trade management process. I am emotionally not letting a core position run, blah, blah, blah. I'm going to approach a market replay session here, and I'm going to do that with the intentionality and kind of a process goal of doing a really good job with trade management, with allowing these, cores to run to their as you should manage them per your process for managing core positions.
Yeah. When you're doing a chart replay, would you any benefit in a different speed, or is it important to
A
you
lot
to
of
do it in
negatives
real
to
time?
doing it at a different speed. A lot of it's there's not that much, let's call it patience or whatever involved whenever there's a lull in between decisions. Now, it depends on what you're trying to do, right? But a lot of people I see, it's so easy to do the right thing when you can just run it at 100x and then just pause it when it's like, that doesn't flex that muscle of having to sit and really feel what some of those little real-time adverse blips or different things that might shake you out, or just the time of your attention wandering. And what a lot happens to most traders is they get sucked in on some of the more granular myopic details, and they need to keep zooming out.
Yeah.
If you run something at 100x, you're zoomed out. And
Yeah.
so you don't get that rep in of potentially getting sucked in through boredom, which is something that needs to be practiced at times.
Even would you say like 3x speed, just so you can kind of have more, to do more with
It
the
depends on what
time?
you're working on. It really does.
Yeah.
Fast forwarding it at times is perfectly fine, because again, it allows you to get more reps of something that you are trying to do.
Yeah.
But if the design of the market replay were to sit in core positions and not do anything and not react, then sitting in there in real time would be the play. Not moving a stop to break even, right? A lot of people have that like as a flaw. Some people, I suppose, can get away with that. For most people, it's a crutch, right? So quick moves to break even, to like not let a winner turn into a loser. Practice sitting in that trade, taking that initial scale, maybe not moving the rest of that stop up, and sitting in that discomfort, right?
Yeah. Okay, you mentioned that you should be keeping a log in real time, and let's say somebody takes your advice on that and they're tracking these things, and they've identified that, hey, this trade I missed, or this trade I traded very poorly, or this trade I traded perfectly. To go back, let's say at the end of the session, and review these things, what would you recommend they actually do? Like, go back and replay those, go back and just observe those, go back and do what?
First and foremost, every decision that was made, whether it's entry, exit, add, whatever, it needs to be ran through the filter of your process, okay, for making good trades, period. That's the first step. So we need to that right there determines, at the hard right edge at the time, was this a correct or incorrect decision, regardless of how it played out in hindsight, whether the fill looks like you're a rock star or whether it looks like you're an idiot, doesn't matter, right? For your process, are you supposed to take that scale there, right? So that's the big thing, is to just see how well are you doing at executing per your process, per your plan. From there, then there's not really much to do other than commend yourself for the good trades or the good decisions within a trade, but to go and then say, okay, I took this scale here. That's a no-no. I know better than that. I should not have done that. Now let's go to the journal. What was there a strong emotion that popped up? Was there a weird market occurrence? Did I get too zoomed in? Oh, look, why? What was the rationale for that one? Because you're going to journal the rationale. Oh, order flow looked scary. Is order flow looking scary a part of your process for taking a scale? It might be, but in this example I'm giving, that's not a part of their process, right? For that particular scale. So it's that starting with, was it a good or bad decision per process? And then for the bad ones, diving in deeper, referencing the journal, taking a look. And for most people, they end up with, once there's a process in place, which most people don't have, but for the strong ones who do the work and get a process in place, they don't have every mistake under the sun. Most of us don't. Most of us have 1, 2, 3 key things that tend to kind of like really be our issues and our problems.
Yeah.
And so there becomes some routine and some, uniformity to the review process and things that, I know I did that there. That's a mistake. But let me say this, I almost sound like I'm kind of making it okay to do that. Repetitive mistakes, once you've identified them in your trading, I see way too many guys who aren't hard enough on themselves. They say, oh, I always make that mistake. I'm so dumb, blah, blah, blah. And they gloss over it. Your reviews, yeah, maybe you start out by saying, I make that mistake. I'm so dumb, blah, blah, blah. What are you going to do about it? Which brings me to one of the most unifying fabrics of the daily work of trading, which is process-based goals. Okay. Don't tell me what your P&L goal is for the day. All right. Well, I'm going to talk you out of doing that one. Tell me what is within your control and that you've gone through a full, multiple cycles of prep, journal, review. And then you get to the review from yesterday and you know what areas that you need to improve. In that review, you need to come up with kind of an action plan. What are you going to do tomorrow to nip that in the bud, right? To take care of it, to make it to part of redefining what it means to win for that session. That's going to be what you focus on, not the outcome of the next trade, not the P&L for the session, but doing that one thing that you've identified from all that work that can take you to the next level. And a lot of times it's just basic things that are kind of a drain on our P&L, even for profitable traders. If you can plug some of those leaky holes, man, you won't believe what it'll do for your bottom line. And that allows, you to thrive for the winners that you're already going to have otherwise. Let's not lose as much of those winners along the way.
For sure. And it's very interesting that such an unsexy topic, but it's this idea of having these reflections and being able to make those meaningful steps forward in trading. It's such an important step. And I think there's been, even looking back at younger times, there were so many seasons of my trading where things were just so chaotic, even to like your point where I couldn't even reflect enough to boil down that, hey, I'm just making these same 2 mistakes all the time. Like if I just stop doing these 2 things, most of my losses go away and I can take advantage of these winners. And a lot of times the unfortunate answers, they're so simple and sometimes right in front of us. And just by missing that step of doing this work of reflecting and something that might not be directly related to P&L going up, even though it has so much to do with P&L going up.
There's no videos online of guys with the Lambos talking about how good a job they're doing at reflecting on.
Yeah, exactly. Now, is this something that you ever like grow out of, or are you through to today, all trading session making these journal entries?
Oh, I definitely do not put in the level of work that I used to with all these things that I'm describing. My prep is still very, very strong, although I don't write it down, believe it or not. Man,
really?
I used to couldn't do that, right? I needed like a process for prep. I needed to say, oh, what do I need to look at next? Where's the overnight high? Where's the overnight low? What was the profile shape from yesterday? Where are we opening relative to yesterday's? But I needed to walk myself through all those things, which takes me back to the point earlier of earn the right to get discretionary, right? You've got to be regimented. You've got to train yourself to get really good at the basics and then the intermediate things. So anyways, journaling, I have it. Here it is. It's right here. There's the mustache you referenced earlier. I got a little
glad they could make an appearance.
I will crack into it when I have something that is strong, okay? Whether that is a strong, like interesting market observation, or whether that is something really strong, intense is going on internally with me, right? Other than that, I operate at such a high level of discretion now with my trading that I'm truly not what I teach in terms of regimented, process driven, right? I allow myself to make a lot of compromises, a lot of exceptions, a lot of bending of what the rules are that I teach people, right? That's just where I'm at a high level of trading. So I'm not so strong on a lot of the work that I teach and whatnot right now. I'm still very much strong on prep. I just don't write it down. And I'm still very strong on important journaling pieces. The review work is not as strong as it used to be. I definitely do it. And I do not skip getting my trades uploaded so that I can monitor my statistics over time and whatnot. If I make some, what I feel like boneheaded, substantial errors in the session, I will thoroughly review those errors and dive into that. If I go into a drawdown, which I do, I will begin ramping up that work. Okay. When I'm kind of coasting and things are normal, I do slack off on some of the work. When I go into a drawdown, it's back to like exactly like I teach. Strong prep, writing things down just so they're there and I can do a better job of reviewing and get very black and white on that. Journaling, super tight on risk, stop placement, very process driven in my approach, not doing all the willy-nilly, more discretionary stuff, bringing it back to the basics and whatnot. And I myself at this point in my trading career, I find myself constantly fluctuating in terms of where I am on that. I'll get really hot for a while and do really well, and then I will find myself getting too loose. And I have to bring myself back to a point of maybe over tightening, and I'm okay with that. And then I slowly allow myself to, again, introduce some looseness to what I'm doing.
This a function of market being favorable or not favorable, or is this pretty strictly personal performance?
It could be both. Certainly, I would say before 2020, it was more so me almost always. Post 2020, man, markets are changing quickly, right? Like these regimes that we see come and go are and volatility ebb and flow, and we've seen it, dry up recently, and then you see today let go again. But one of the things that I've come to the conclusion on of those, let's call it a more drastically changing market, environments, is kind of those different tactics that I talked about, where given the read on the overall environment and volatility, I'll deploy different tools, right? Whether that's multi-market, single market, scalping, intraday position trading, option swing.
Yeah. How long do you think you'll trade for? Do you have any ideas of once you get to a certain age, you kind of need to hang it up, or do you just, is trading something?
I love it way too much. Yeah, I love it way too much to stop. I hope to do it until I'm feeble, can't. My children are like taking me away from it. Like, Dad, you're losing a little too much. Like you can't. In terms of like risk relative to, let's say, net worth or whatnot, I will certainly ease out of that, right? I'm not going to risk ruining everything. I'm not going to be one of those traders that you've heard about. Sure. A lot of the pit guys, go from multi, 8-figure performers down to losing it all. Obviously bad things can happen. I could get caught in a flash crash and lose everything. There's risk inherent in what I'm doing. But I was pretty balls to the wall for a while in terms of risk and whatnot. In terms of just how many different baskets of assets might I have or whatnot, I was really concentrated, right? And I am starting to kind of spread out, if that makes sense.
For sure.
But in terms of the day-to-day love for trading and markets and trading serious size and all that stuff, I hope to be able to do that for a very, very long time.
Very good. It's just an interesting thought, something you said, and this is something I've identified myself that I have to battle against I've really had to work on keeping this in check. You say when things are going really well, you kind of, ease up. And then if things start turning, you start having any kind of dip in performance, this is when you're going to start tightening stuff up. And for some reason, I don't know if you've observed this with other people as well. I'm actually the quite opposite. When things are going well for me, I just want to live in front of the screens and I just want to put in extra work, and it's so much more motivating. And as soon as I start going through drawdowns, I really have to force myself, because I used to just not even want to. I'd be very unmotivated to do anything extra, or to try and put in that work of tightening stuff up. Have you experienced those polar opposites with people?
It's hard for me to tell. I'll tell you that.
Okay.
I think that people that I rub with on a consistent basis, whether that is someone who is mentoring with me or whether that's one of my traders, I'm not trying to call people liars here, but if they're in a drawdown, we're going to be in touch and we're going to be figuring out what the game plan is and whatnot. And I almost like it wouldn't be acceptable for them to kind of tell me that they're checking out. Right. So
sure.
I don't get to see what people's natural tendencies are in those ways. So maybe I'm a little blinded as to that. So I couldn't speak to that. But I certainly try to get people to buckle down. Now, from a mental perspective, when someone's in a drawdown, the last thing you want to do is like put a bunch of extra pressure on them. And like, I'm not talking about that.
Sure.
I'm just talking about how can I help? Let's get clear on what's going wrong. What can we do? What are the things that are within our control? Do we need to reduce size? Where's your head at? Do you need to go to sim for a while? Like what's going on, right? Like that type thing.
Yeah.
But then the work needs to be being done. Now, if you tell me, Merritt, I'm burnt out, I need to go on vacation, I'm like, that is the smartest thing I've heard you say, for a while. Like we all need that from time to time. For those of us really, really grinding and working hard at trading, you got to take breaks. You got to get away from the screens from time to time. It has to be done.
Yeah. Okay. With the markets in general, from your perspective, how in a market like the S&P or just the futures market, maybe in general, what is the level of predatory type like manipulation from your perspective that happens, where maybe not just the normal ebbs and flows of trying to match together buyers and sellers, trying to find value, but actually blowing through these to scoop stuff up or to run people out? Or
I think that's part of the daily game. Yeah. I think markets seek liquidity, right? That's their main function, offsetting risk and seeking liquidity. And I think that if there's a bunch of liquidity in an area and whether people call it a pain point, people call it running stops, whatever, that's what the market is going to do in a sense. I think that on a more perhaps smaller scale, like little swing high, swing low intraday stuff on, let's say, a 3-minute chart or even a smaller time frame, I think that absolutely there are programs and everything that's just simply designed to eat through resting liquidity to get through areas that I suppose those algorithms know are key areas. It's not rocket science, right? Beyond prior swings, beyond double tops or double bottoms or prior highs and lows. How often do we see these things get ticked, right? 1, 2, 3, 4, 5 tick, depends on the market, right? NQ might go through it by 15 ticks. The 10-year might go through it by 1, right? But those types of games, if you will, or whether you call it manipulation, I think that might even be too strong of a word for what I'm describing here. That's part of the market, and that those are some of the programs. I don't get hung up on the algos, like people like to kind of focus on, like it's some like ethereal problem monster thing. Other traders, whether they're algorithmic or manual, doesn't matter. They're absolutely doing those things.
Yeah.
But they're doing those things pretty consistently where they can get away with it. And by the nature of that, there are patterns that emerge, right? Like one of my favorite price action patterns, which I don't mind sharing because price action patterns are like 10 rungs down on the hierarchy of what I think is most important for a trade, right? A price action pattern is just a dime a dozen. It depends on where you take a price action pattern that makes it a good trade or not. Is something called a I'm trying to think of describing the bullish one or the bearish one. Let's call this the bearish one, an upthrust pattern, right? The market comes in, it puts in a little high, maybe one or two of them, and then it spikes through that, and then either on the same candle or the next candle, it falls back below where those little one or two prior swing highs were, right? The concept is the same as a head and shoulders pattern, right? It's all the same stuff.
Yeah.
And from a profiling perspective, what is the little wick before we fell down?
Little tail.
Excess, right? And so that wick through, not in open space, but specifically recently from those where those two highs were, that's a stop run. That is someone who's pushing to do that.
Yeah.
And they're competing for that liquidity and then grabbing up the stops that are going off and whatnot and slamming it back, right? And so that's a pattern we can start to identify. And so it doesn't really matter that they're playing some game to run stops or do whatever. And guess what? They're going to run my stops sometimes. I'm going to get caught in their little game. Whatever. It doesn't matter, guys. You can still do well despite getting caught. Sometimes you just got to tip your cap and go on. And that's why I think short-term traders, the art of the reentry. If I ever write a trading book, it's probably going to be called The Art of the Reentry. There's so much randomness and so much little gamesmanship and different things that we all get caught in getting shaken out unless you want to drastically reduce your risk reward on the trade and trade with really, really, really wide stops relative to the timing that you have and the skills that you have, which I don't want to do. So I'm going to get caught in stop runs and I'm going to bang back in when I identify, reading the tape, seeing what the volume was like on that stop run. There's tells there as to whether that's a new move that you should be concerned about and that it's a contextual shift, or whether it's a stop run, right?
Sure.
And that's power. That's information. That's something I can use rather than go complain about it, after work.
Yeah. I think for a lot of people, myself included, there's always certain amounts of mystery around what is actually going on, especially when you're starting off, because you just don't know. You don't really know what the big banks are doing or what the algorithms are doing. And there is this shroud of mystery. And I think on one end, there's people that walk into this just like, all I have to do is follow this indicator and, it's going to print me money. And then on the other extreme, maybe everybody's out to get me. This is, there's no way to do anything in here because it's so, they're just going to take all your money. It's all just da-da-da. And there's somewhere where there's this medium of realizing that this is a financial war and people do want to take your money. And if you give them the opportunity, they definitely will. But at the same time, this is not an environment that is impossible. And we do have, as active intraday traders, a certain set of even strengths that other participants might not have that we can lean into. And of course, we have weaknesses and things. Yeah, exactly. And of course, we have weaknesses and things we just have to be aware of. And it's almost like, I think of very much like US politics sometimes, where I know a lot of people that get extremely upset one way or the other. And to me, that's like this high level game that at the end of the day, I still have my stuff to take care of. I still have my life to live. And I've seen so many people think the world is falling apart because somebody got elected and then almost nothing changes and yada, yada.
Politics here are like the new religion, right?
Sure.
I wish more people would take your view of just like focusing on themselves, their families, their communities, rather than what's on the news thousands of miles away from you or what some politician, is saying or doing or whatever. They're not gonna solve your problems.
For sure. And I think there's a correlation here to the markets as well, to where, yes, there are these games being played. There are algorithmic programs that are being run. There is bigger business that needs to happen, but there's all of these almost peripheral things to the job that we have to do, and the niches that we have to, the money that we need to make, and the opportunities that we need to be able to take advantage of. And it's much more profitable. It's much more helpful just to focus on that and to have that right balance of some the gravity of the situation, understanding you're in, not to be, understand this is a dangerous situation and the market will take everything you give it and more. This is very competitive, but it's not hopeless, and we're not just going to get money stolen from us every day.
You definitely don't want to see the market as an adversary. even though I've said several comments over this talk around how like people are out to get you, blah, blah, blah. At the end of the day, it's such a mix up of different people trading and interacting for different reasons that will always be unknown. Right.
Yeah.
And sure, like, you know, if I make money, there are certain people who are on the other side of that trade, but we don't need to view it that way for it to work. And you really don't need to get into the market is against me, the market is my adversary, because that just leads to really huge losses in objectivity, because now you're angry. Now you're afraid the market's going to do something to you. All right. You want to do something to the market.
Yeah.
Which was
self-fulfilling prophecies. Of course they turned right when they got out.
Yeah.
You know,
I'm a really, really good trader. I'm really good at what I do. And I get top ticked. I get bought. Like it happens. Right. Yeah. And coming to terms with like, those things are part of the game. Everybody's got the $1 billion or however many $1 billion fund manager. They got some real problems that they have to deal with, right? The intraday trader has some problems and little shakeouts and blips that we have to deal with that they aren't even aware of that's occurring. It's not even on their radar, right? So we've all got problems, guys. How good are you? You know, it's like one of the big mantras I have for trading is like, in order to become a good winner, first you just simply have to become a really good loser. And that is not only a process, mechanical trading type of commentary, but that's a psyche commentary as well. You've got to learn how to be a good loser if you're going to be a winner.
Right. When it comes to YouTube, do you have a personal YouTube channel or is it just Apteros?
Just Apteros.
Okay. Do you have any plans for YouTube as far as trying to ramp this up or push that, or is it just a supplementive thing always for you?
Well, I mean, if it were up to me, I would do none of it. But I don't enjoy that stuff. I don't enjoy being on camera. I enjoy having conversations with guys like you who get trading and want to talk trading. You know, I enjoy it truly. But when it comes to like putting out content or doing those things, I really just don't enjoy it. Now, I made the choice to start a prop firm. And in order to be as successful as I can at that, I need exposure. I need people to know about it and perhaps connect with our culture and what we do that might be different than some other places, and find the most people to find the right people, right? And so in order to do that, I understand that I need to create exposure and do those kind of things. But I'm an introvert by nature and kind of would do less of that naturally.
Sure. Yeah. I think, and maybe something to think about as well, because I see the massive gap. And I know for me, for some reason, when I got into trading, it was just so obvious, like really obvious, that this person trading Forex, there's no way he knows what he's talking about. And then you see somebody who is trading futures and the way they talk, like things can be very different. And it's very much the dynamic of, I would even say the majority of people that have a ton to say are, nobody's ever heard of them, or they're just, you know, and then people who have absolutely, you know, nothing to say are just saying so much. It's crazy. And anyway, something to maybe think about, because I know it's a weird dynamic, and I actually don't enjoy sitting down and recording content either for YouTube. I think it's just like a weird thing. But I find live interaction stuff to be much more enjoyable, much better to do. And maybe if you ever think about trying to push stuff more, maybe thinking about something a little bit more live and conversational to do because I feel I would put you in that group of people that I wish said more, and I wish that your stuff was out there at a higher degree.
Thank you.
For sure. Yeah. Okay. Well, listen, we'll wrap it up right there. You've gave me so much of your time. I really, really enjoyed sitting down and talking with you. We'll put any type of link that you're interested in, you know, in the description for people to find you. You have the YouTube channel, Apteros, which you hate. You have your Apteros.com is your website.
ApterosTrading.com.
Trading.com with link in the description, but that's where they can find more about you, more about your trainings, more about your prop desk. And then Twitter's the place you're the most active as far as social goes.
Yeah, probably just my Merritt Black Twitter. We do have an Apteros account, but a lot of it is kind of retweets and stuff from what I do there. So
sure. Okay. So maybe the best place to follow you along if they want it. And then we'll put that in the description as well. Anything else as far as parting words, or anything you'd like to say to anybody, or anything you'd like to direct or even, I don't know, promote?
no.
Right on. Well, listen, big thanks for having you. I'll stop the recording and then I'll say goodbye to you proper. So goodbye to everybody watching publicly, and then I'll say goodbye to you in 1 second.